Greetings and welcome to Mentor Mike's Market Movie for Wednesday, January 29, 2014. Right now it's about 4:45 p.m. Pacific time, and let's get started. First of all, I am trading using what we might call my contest trading rules. I have mentioned in the past that I'm thinking of participating in the World Cup Championship of Trading in 2015, so I'm starting to practice now, and I'm constructing my trading rules so that they will mimic to some extent the rules that I'll be dealing with if I participate in that contest. So I am assuming a $9 per contract transaction cost and a $3,000 per contract margin. Now, in my actual day trading, I can do considerably better than that. My contract transaction cost is $6 and my margin is $400. But if I were to participate in the contest, these are the rules I have to play by. So $9 transaction cost, $3,000 contract margin. I'll be starting with $10,000 and trading 3 ES contracts. In order to add an additional ES contract, I'm going to need a minimum of $3,000 in additional risk capital provided by Profit. I'll be using a 2-target peeling off strategy with the first target based on the ATR, average true range. And the second target will be 2 intervals up in the Fibonacci sequence. I have to wait until I've earned 9 contracts worth of profit to move up to 3 targets. I'll be applying the NinjaTrader auto break-even function to create a free trade once my first target is hit, and I will allow NinjaTrader's auto trail function to assist in stop trailing. Now, special announcement. I plan to reopen my live S&P E-mini trading room at the end of summer, just after Labor Day, or possibly sooner. Depends on my travel schedule. It'll probably start later and end earlier than the previous version, possibly 7 a.m. to 12 noon Pacific time. I'll probably take every Friday off, except on holiday weeks when there's a Monday holiday. It'll be open only to current and former students of Pacific Trading Academy, not to the general public. This will allow totally unrestricted discussions of techniques, parameters, and strategies. Good for everybody. The emphasis will be as much on education as on making money in our actual trades. Students will be able to verbally and audibly participate, not just through written chat. That's going to mean that you're going to have a USB internet microphone, but those are pretty cheap at Office Depot or whatever. And if I do, in fact, enter the year-long World Cup Championship in 2015, I plan to do my competitive trading in the trading room. So if I succeed in doing well, those who follow my trades will do well as well. That leads me to this no-obligation survey. It's still a contingency of my reopening the trading room that we have a sufficient number of people interested. So if you have not already weighed in on this, please email me to let me know if you are interested in participating. Send your reply to mentormike@sbcglobal.net. If you've already let me know, you don't need to do so again. You're already on the list to be notified when details have been worked out. Now, here is a screen capture of today's live trading. Now, this was done on a demo platform. I have to do it on a demo platform because that's the only way I can plug in a $9 per contract transaction cost. But as you can see, I took 6 trades and netted $763, trading 3 contracts in each trade and using 2 targets. And yes, boys and girls, that figure is net of a $9 per contract transaction cost. So please don't ask me that question again. Now, this is what the day's real trading looked like. We're going to try and see how much better or worse we can do in our trading replay today. And I've got everything set up here. The data feed has been stopped at 5:30 a.m. this morning, and we are about to get on board. Let me bring my little control panel in here, and let's start the data flowing. And I'm going to ease up on the speed so we don't miss an opportunity. I'm going about 30 times normal speed here. There will be places where we'll be able to pick up the pace a little bit, I'm sure, but right now that's where we're at. Okay, now, this is still a bit of an aggressive entry, but let me tell you why I'm taking it. We have a red, white, and blue alignment. Red parabolic, white MA, and the price is now breaking below our blue MA. We have a bearish MACD on both time frames, and we have rising volume on both time frames. There's a pretty good chance we're going to run into some support here at the pivot point level, but that's a ways below us here, so there's still a chance that we might at least hit the first target. Now, notice that our ATR is above 2, so our initial target is going to be 8 ticks here, and I have to set that. I'm going to be selecting my World Cup practice setup here, and I think we're ready to go. Let's take that trade at the market and start the data. We're going 50 times normal speed. Hit the first target, move the stop automatically. And are we going to get stopped out, or are we going to hit that second target? We did hit the second target. So after the first trade, we are up 462.50. One of the most dangerous aspects of trading is re-entering a move that's already underway. And it's actually easier at times once you get to the point where you're trading 3 contracts, because you now can stay in some of these trades if you're not stopped out on the pullbacks. This thing looks like it wants to go lower. Let's give it a shot. First target is hit. Oh, the stop did move. I was just about to do it manually, but it moved on its own. So we'll go back to starting the data. Okay, did not hit the second target on that go around. Got stopped out short of that. Our score is now 687.50. Again, that's net of a $9 per contract transaction cost. Now, let me show you one of the things I do here. I pause the data. I'm going to put a Fibonacci grid here. On the last previous move here. Actually, I want to start it from this low here. And we can get rid of the lines that we don't need, which is everything above 127.2. That'll make it appear a little less cluttered. And we'll stretch it back out again. And notice that our S1 pivot point is really close to our 161.8% Fibonacci retracement. That suggests that there's a good possibility that this market is going to go that much lower at some point. Giving you guys a little extra here because this is the kind of thing that we'd be doing in the trading room if we're all on the same page, teacher and students. Okay, now we're breaking south of the blue MA once again, and we have that red, white, and blue alignment. Let's see if in fact we will get down to the S1. Notice that our initial stop ended up being just about on top of our parabolic. Well, drop like a stone and hit the first target pretty quickly. But we did not move the stop, I don't believe, and we need to be 2 points above this, and it looks like we're already in stop out zone. So technically we should have been stopped out, but since we weren't, let's play it out and see what happens. Ooh, that was close. Again, should have been stopped out. But we'll continue to play it out. It is going to go up. And I do think it's going to take us out here. So let's reverse at this point. And this is going to be a loser. Now, if this was at real speed, I would have moved the stop manually after the first target, and we would have been stopped out with a profit, a minor profit. But we're taking a bigger hit than we would normally take here. But we'll go ahead and play it on out. And why do I have 4 contracts here? That's a good question. It says 3 here. 2, 1, 1. What's going on here? All right. Something's amiss, but we'll play anyway. Let's go for it. Okay, and again, we need to move the stop manually here. And stopped out. Well, we're still got 650. We should have had more, but that's okay. Okay, I've paused it here. Now look at what we got. We have a red, white, and blue bullish alignment. We have some pretty interesting support here in between the 127.20 and the 161.80. We've got some wilting volume on this time frame, but the volume is still rising over here. I think that at the very least, we're going to take out this high and push this Dacian channel upper bar a little bit higher. So let's go long. And this calls for another arrow. And let's see what happens. Oh, it loves to do those attrition fills here. What's an attrition fill? That's where it hits our target without going the extra tick to move the stop. So, once again, we'll move it manually. That protects a minimal profit, but hopefully this thing will keep going and hit the second target. And we're stopped out. Score is now 850. Now, we still have no volume on this side, so let's just keep going for a bit. And it looks like we're running out of steam here. Okay. Here's our parabolic. Wait till we get the red and white and blue, which is about to happen right about now. And we're a little shy of a crossover on our MACD, but we do have rising volume at this point. And the fact that we've got the bearish signal suggests that this rising volume is going to be in this direction. So let's get short. Excuse me. Okay, took out the first target and moved the stop as is supposed to. Now, what's going to come first, the stop out or the second target? Apparently the stop out. Okay, now we're breaking south of the blue MA, which means we got a bearish red, white, and blue. We've got a full-on cross on the MACD now. Slightly wilting volume, but not so bad. Let's get short. Our score right now, by the way, is 1,112.50. Remember, we're trading 3 contracts. Not bad for that kind of exposure. This is not looking good. Having trouble breaking that level of support. Look at that lower Donchian channel. What's going to come first? The parabolic flip or the target? Touch that support level. And again. There we go. That's what we like to see. But that might be all we get here. And we're stopped out. Okay, score is now 1,300. Now, remember, I didn't take the first 2 trades here. We didn't start till later in the day. So we've already doubled the actual score, but that's to be expected because, remember, this is an after-the-fact kind of ideal situation. Let's see what else is going to happen here. Now, we flip the parabolic. Oh, you know what? I forgot. Today was day 2 of a 2-day FOMC meeting, the Federal Open Market Committee. And what happens when the press conference happens at about slightly after 11 a.m. Pacific time is that the market typically goes a little crazy for the better part of an hour. So we can kind of see that the market wants to go lower. And let me show you something real quick here. Here's our higher time frame. This is the next couple of steps up in the Fibonacci sequence. You can see the price has been coming lower for some period of time and then spent a couple of days in an obvious correction, and now we're selling off again. So notwithstanding this spike to the upside, it looks to me like the market does want to continue going lower. So this is a bit of a knee-jerk reaction, and I bet you that it will continue lower from here. And since normally we wouldn't be trading after probably 10:30 on a day like today, we're kind of in uncharted waters. But let's do this. Let's go short because ultimately that's where it wants to go. And both our MACDs are still bearish, and we still have blue below white. So I'm going to do this. And we shall see what transpires. Okay, well, we picked up a little bit of profit there. Score is now 1,500. And I think we'll pick up the pace and let this craziness go away before we think about trading again. Well, there we are down there in the vicinity of the S1, as I suspected might happen. In fact, notice where we've stopped here. It's basically at the S1 and the 161.8. But we still have a red, white, and blue bearish alignment. So I think for all intents and purposes, we're done for the day. What time is it? It's about 11:30. 1,500 is a pretty respectable score, but let's just run out the data, shall we? And see if there is some other opportunity that just looks too good to pass up. I'm going to flip that parabolic. Yep. And now, all right, there is a red, white, and blue bullish alignment. Dare we take one more trade? Sure, why not? Now, in reality, I wouldn't. I'd take my 1,500 and call it a good day, but let's just see. We've got the signals going here, a little bit of a hook on that MACD. This one's almost crossed. We got rising volume on both sides, and red, white, and blue. We'll get long, and start another arrow down here. And we're not exactly going in the right direction, but let's see if this is going to recover. Stopped out, down to 225. Well, goes to show you, nothing works 100% of the time, even when the signals are there. Let's see if we get another opportunity. Well, there's a red, white, and blue bearish alignment, but we've got a double thick layer of support right there. And once we break it, now you can see why it would have been a wise thing to take the 1,500 and leave the table. Greed can get you in trouble. Now, it's past 12:30 on the replay clock, and my usual rule is not to take a new trade after 12:30. But let's see how this finishes up. And we're just about at the point where we would be normally stopped out by the time stop, right about there. All right, well, let's see. This was our fateful trade, wasn't it? So we had 1, 2, 3, 4, 5, 6, 7, 8, 9 trades. 7 winners and 2 losers, and we finished still in the money with 225. Hardly a king's ransom, but with 2 losers in a single day, finishing in the money is still a good deal. But this was the one that we shouldn't have taken. In retrospect, we can see that our white MA, which I call the directional MA, is still pretty bearish. It's still heading down at a pretty good angle. So yes, we had a red, white, and blue bullish alignment, and our MACD kind of faked us out a little bit here. But, you know, that's going to happen. So if you can make a few mistakes and still finish in the money, that's what it's all about, folks. So there you have it. So hope you'll come back and join us next time. Bye-bye for now.